In my opinion, based off of the research that I've done, having a high probability setup takes a lot of research, and I'm going to show you guys what you can do in order to get one. In order to take high probability setups, a trader needs to understand a few specific things, and that is what I'm going to be showing you in this video today. Please do me a favor and subscribe, press the like button, and I appreciate you guys for watching this video. If you have any questions, let me know in the comments and I will provide an answer. So in this video, I will be sharing with you guys some resources as well as reasons as to why you should follow these resources and how they can give you a chance to get high probability setups in the market. The first thing that you generally need to know is that high probability setups generally come from the quality of trades and not the quantity of trades. So the first piece of advice that I have for you guys is to have patience when in the market. And not just general patience, but patience specifically at areas of rapid movement or high volatility. When we're live trading in the market, rapid movement to one or the other side might generate fear of missing out. And let me show you guys what I mean by that. When we're looking at live price action in the market, rapid movement to either the upside or downside might make us anticipate a move at that area. And this example of downwards liquidity is a good example of what can cause fear of missing out when live trading. If we don't have a proper understanding of where price is going to go to, then all we can do is anticipate, which is not good because we can get stopped out very easily in the market if we don't have a proper understanding of what is going on. There's going to be times like this where the general direction of the market is uncertain, and that is when we take a break or just watch things play out so we have a lot of intel for the trade that we take once we find our setup. So if we don't have a general bias of where price action is going to go and we see some rapid movement to either the upside or downside, it would be generally better to sit it out and wait to see what happens so you can find your strategy setup play out. This second bullet point here says not understanding how price builds momentum might change your bias. So this downwards movement right here is a very good example where we get a lot of rapid movement which can cause fear of missing out and change your bias, forcing you to take a trade at a specific area in this downwards move candle. If you guys saw this movement to the downward side in live price action without an understanding of where price is going to, then that might generate fear of missing out or even change your bias when you're trading in the market. So we need to understand how price displaces and builds momentum before going in the general market direction. As you guys can see, we're in a general uptrend market right here, and I drew some trend lines at the areas where we get displacement to the downward side. The main question that we should be asking ourselves is, why does this happen when we're in the market? So if we can see that we're moving to the upward side, price has to displace and chase stop losses and orders before moving in its general direction. As you guys can see with the channels I marked out, price will move to the downward side to stop people out and fill orders before having enough momentum to continue to the upward side. So what you need to understand is that price will do displacements before continuing its general trend of the market. As you guys can see with this downwards trend right here, price makes upwards movements to stop people out and fill more orders before gaining enough momentum to continue its general trend. In most cases, price will do a displacement and a general trend to build momentum to go towards whichever side we're looking at in the market. In this case, it's up. We also need to understand the news events and the power behind them. There are many news events that happen intraday, and watching them and seeing how the market reacts to them can give you more intel and bias when trading. The main thing I'm getting at here is that if there's rapid movement to either the upside or downside and you have no general idea of where the market is trying to go towards, then it would be better to sit out and wait until your strategy forms so you can take a more probable trade in the market. So now we need an understanding of liquidity and how the market builds momentum. So the first thing we need to understand is that without market or limit orders, liquidity in general wouldn't exist. So we got to understand that retail traders, institutions, and banks fuel the market to move either to the upside or to the downside. So in order to build momentum to go towards the generally dominant side of the market, price needs to displace and fill orders before doing so. This liquidity to the downward side stops people out and builds momentum to go towards the more dominant side, which is bullish in this example. So when we move to the downward side, we're actually stopping people out that took their long positions at this area. There will also be limit orders, which is orders placed at specific areas of the market Once price touches them, that is also momentum built towards the upward side as well. After a specific amount of displacement to the downward side, price will build enough momentum to start moving to the upward side. So this liquidity to the downward side is not just displacement. We're stopping people out, filling momentum, and grabbing orders in order to go to the upward side and potentially close above this high right here. This point right here says using the daily time frame can help you build a bias on the more dominant side of the market. So I'm on a daily time frame right here, and I don't know if you guys can notice, but we're very close to equal highs on the daily time frame. So here on this daily time frame, we can see our areas of liquidity where price goes towards before moving and displacing to the downward side. And when we're in areas like this, price tends to go towards the upward side to fill orders at this area before grabbing momentum to go to either the downward side or continue upwards. And the movement we're going to get once we get towards this area is going to be rapid because, like I said, orders are going to get filled here, stop losses are going to get hit, and momentum is going to be built in the market. We can also gain a daily bias by looking at the general price action of the market and anticipating where price is likely to go towards the following day. Of course, without confirmation, you shouldn't take a trade, but a daily bias is simply a bias of where you think price is going to go because of information or intel that you see on a higher time frame. Price action moving above these areas of recent highs where we get downwards movement is called a liquidity sweep. And a lot of the time when people get a sweep above this area here, they're expecting or anticipating a downwards move. And I want to clarify with you guys, a sweep of liquidity can generally mean a reversal to the downward side, but we need to see confirmation that that happens before we take our trade. What we generally need to see when it comes to a liquidity sweep is confirmation that price is either continuing upwards or displacing to the downward side after. And once we get our confirmations and our confluences play out, we can take an entry in the market. So if we're trying to get higher probability setups in the market, we need to have an understanding of using the higher time frame for stronger confluences. So just in case you guys didn't know, the higher time frames like the hour and the 15-minute are going to give you generally stronger confluences when you're trading. If you're trying to take more quality trades than quantity trades, then using the higher time frame will give you more of an advantage. If you have an understanding of how to use higher time frames for more confluences, your trades can be generally stronger. In order to take high probability setups consistently, you need to understand your strategy and how you're using it in the market, which means backtesting specific strategies to have a sharper edge. If you guys have a strategy that you picked up somewhere and you're using it without backtesting it or seeing if it actually works, then you're putting yourself in risk just trusting someone else. And this is why I always say to do your own research. No matter what it is, you guys need to make sure that whatever you're using is probable and works for you. Because what works for someone else might not work for you, especially if you're not backtesting it or using it in the way that that person is. So just keep in mind, before you take an entry in the market, at least backtest your strategy and see the probability behind it. So if your list of confluences end up being something you don't like, or it's not as probable as you thought it would be, it's perfectly fine to try something new. But at the end of the day, you guys need to make sure that you're backtesting whatever you're using before stepping into the market. And we're about to wrap it up here, but there's one more thing that I want to show you guys before we do so. And out of all of the resources I gave you guys, this right here is what I see as the most important. Stop allowing propaganda to choose your trading edge. A good example would be seeing someone's video on their platform with the negative bias against a specific set of confluences in the market. The main thing I'm getting at here is that you guys shouldn't be trading off of what worked and what didn't work for that other person. You need to see what works for you. It's good to backtest and test these confluences so you can gain more experience and build the edge you need to take trades in the market live. So don't just go with the negative bias you see on a video. Always backtest so you can build experience and edge when you're trading live. Thank you guys for watching this video. Please make sure to drop a like and subscribe. I have free courses and a free Discord for you guys in the link in my bio, so check that out if you're interested. And like I said, if you guys have any questions, go ahead and leave your comment in the comment section and I will provide an answer. Thank you guys for watching and take care of yourself.